Pay Attention's partnership with YouTube, Spotify, Discord, or Patreon is not investment financial advice. All programs and resources are intended for informational purposes only. All thoughts expressed are opinions, not used for or with the intent of instruction. We ask you to always do your own research and invest at your own risk. What's up, everyone? Welcome to your 2023 episode of Got Assets. It's your host, Xavier Smith, stock consultant with Pay Attention. And today on Got Assets, we're going to be focused on information, transparency for the various crypto scams, right? People are losing savings, investments. People are losing around the world millions of dollars through the greedy people that don't care.
You know, what's up, everyone? My name is Ace. I'm the lead digital asset consultant for Pay Attention. And crypto scams are pretty common, you know, and people that participate in the industry tend to lose millions of dollars a year due to falling victim to a crypto scam. So yeah, we kind of want to bring some awareness around what scams look like. You know, some of the characteristics you can kind of point out when it comes to a scam, and how to steer clear from those. So let's get it.
Yes, sir. And just so we can get everybody focused on the third week of January, our word of the week is correlation, right? As an investor in any market, pretty much, you're going to hear this word from that beginner, novice level all the way up to the expert, master level. You know what I'm saying? Correlation. So meaning, how does one entity correlate with another? How does they play hand in hand? You know what I'm saying? What happens when this market goes up? How does the other market react? You know what I'm saying? Correlation. So you may see this as an investing definition. You may see this in business. You may see this in school. You may even see this at home. You know what I'm saying? But our word of the week is correlation. So, you know what I'm saying? If you can, in a word, in a sentence, correlation, an example of correlation would be the dollar index. When it sells, you may see some ETF indices like the US 30, Dow Jones, or SPX, S&P 500 buy up. So the correlation is the opposite in trend.
We like to officially welcome all first-time viewers and our returning viewers for tuning into our conversation. You know, don't forget to like, comment under the video, comment some topics, you know, post some questions. You know what I'm saying? Keep that energy in the comments. We definitely want to get some feedback from y'all to help steer what we talk about on these Pay Attention and Got Asset episodes. And be sure to stick to the end of the episode where you'll get my crypto pick and Xavier's stock pick for the week.
Lit. Okay, bet. So yeah, as Ace said earlier, he is our lead crypto digital asset consultant when it comes to this industry of cryptocurrency, of this topic of NFTs, this whole billion-dollar conversation around digital finances. You know what I'm saying? So we're going to open up 2023 with crypto scams, right? How have people been hurt? What can people look forward to prevent themselves from getting hurt? And just talking about some of the popular scams that are not good, but popular as in a lot of people know about it or have been affected by it. So Ace, you know what I'm saying? As we intro into crypto scams, identifying scams, centralized parties, communication channels, you know what I'm saying? How do you want to go about when we talk about the common investor, the first investor, or even someone that's invested for some time now? Identifying scams, what are some things, red flags, or some hacks that people should look for to stay prepared?
Yeah, so I mean, common characteristics of scams, or, you know, I guess members or individuals that are part of a scam are, you know, they don't like when you ask the hard questions. You know what I'm saying? Like, how are rewards distributed, or how payouts work, and, you know, giving out, you know, timely updates. It's always like gaps in communication, you know what I'm saying, which leads into the communication channels. People may keep an active Discord. A lot of projects, they have an active Discord community. They're present on Twitter, for instance. That's where a lot of the crypto people are, you know, famously called crypto Twitter. So if they're active, if they're a legitimate project, they typically do run some type of Twitter account or Discord. Even the fraudulent ones can run Twitter accounts and Discord channels. But the fraudulent ones, they don't like when you start asking detailed questions. They tend to have gaps in communication where you may not hear from anyone from the team for weeks on end. That's typically not a good sign. They don't like constructive criticism. They don't like when you speak critically of a particular of their project. They label that as FUD, which stands for fear, uncertainty, and doubt. Even if it's a legitimate concern or question. So those tend to be red flags. You know what I'm saying? So you definitely want to look out for that to identify scams. All the things I listed there. But moving on,
people. My bad.
No, go ahead.
For new people or just investors in general, right?
Mm-hmm.
And that could be anybody from any background, any walk of life. What are some of those questions looking like? Are you asking questions about the ecosystem of that crypto, the finances of that crypto, or the governance of that crypto? Because it's a new industry. You know what I'm saying?
Yeah.
What questions are the right questions?
Well, I mean, there's never a right or wrong question. You know what I'm saying? If you're asking questions to gain a better understanding of what it is that you're potentially about to invest in or already invested in some cases, there's never a right or wrong question. If things like I tend to see certain projects switch. I've seen certain projects switch up or their attitudes start switching up towards specific members when they start asking detailed questions around like tokenomics, how payouts work, what's the development growth of the project, what's next, things of that nature, what's the extended or long-term vision of a particular project. And of course it's easy to answer those the first couple of times, but then you start getting asked that several times, and it's usually because the investors or the users of that project are not seeing what they were essentially promised, in a sense. Like, they're not seeing any motion, right? And that's really where the uncertainty starts setting in. The uneasiness starts settling in for the common investor, the common retail investor. When it comes to crypto is honestly mostly traded on emotion. So the very minute,
wow,
whether you're a good project, a legitimate project, or you're a fraudulent project, the very minute your core investor base feels like stuff isn't moving, whether it is or it isn't, that's when the negative talk starts setting in. And that's where the critical questions start setting in. And if you're a fraudulent project, it's hard to kind of keep the facade up, right, for a very long time. If you're a legitimate project, it's nothing to answer those questions and then deliver when y'all deliver. You know what I'm saying? Like that, because the industry of crypto is still based off of emotion to one degree or another. People are going to come and go regardless of if you're a legitimate project or not. You know what I'm saying? You're going to see price volatility to the downside and the upside, whether you're a legitimate project or not. But usually the legitimate projects, they can recover as long as they continue to build. Those fraudulent projects, once that downward pressure starts going, man, they're pretty much dead. So yeah, just asking those detailed questions, like how things work, what type of progress the team behind the project is making. And honestly, if they don't respond, normally that's a bad sign. Or if you randomly get blocked for asking a certain question, that's a bad sign. And I've seen that happen. People have gotten kicked out of Discord channels or Discord groups for simply asking viable questions that that particular team behind the project deemed as fear, uncertainty, and doubt, and use that as the basis to block or ban people from the Discord group. So yeah, no, it gets slimy out there.
Okay. So a big conception with cryptocurrency is a form called decentralization. You know what I'm saying? So I think to talk about it, let's not tell them what decentralization is, because we know that's when you don't have a party in control. But what is an example of centralization, and how do people live in those systems of centralization today?
Yeah, well, the easiest form for me to point out of centralization is the traditional banking or traditional finance system. There's obviously plenty of scams all throughout that, but we're not talking about the traditional finance system. We're talking about crypto.
Right.
So when it comes to centralization in terms of digital assets, you have exchanges like a Coinbase or like a BitTrue or even an FTX, which everybody at this point knows about FTX. They've been in the news for almost a couple of months now, and that's where you start seeing centralized ran scams. FTX, if you know the story, if you don't know the story, just a quick summary. The CEO of FTX, Sam Bankman-Fried, otherwise known as SBF, was essentially using customer funds to invest and fund other ventures. They also did that in collusion with their trading desk arm, Alameda Capital. And what the issue is essentially because when it came time to withdraw, obviously we're in a bear market. Things get tight for people. People need to cash certain assets out and turn them into liquid cash or whatever the case may be. And when a certain threshold was starting to hit, people weren't able to withdraw their funds successfully. Withdrawals were frozen, things of that nature. The FTX, which is a centralized exchange, they had a platform token known as FTT. They used that to leverage a lot of the debt or that they accumulated and eventually led them to bankruptcy. They also used customer funds to leverage against the FTT token. And that, basically spiraled and created a lot of issues for FTX as we see now. A lot of people invested in the FTT token. A lot of people put their assets on FTX. And now that they're locked up in a bankruptcy court filing, these regular everyday customers like you and me are out of money, thousands of dollars. I believe that overall, FTX customers are in the hole of 8 million or so. Yeah. So, or no, not 8 billion. I think it's 8 billion actually.
8 billion.
Yeah. So I need to look back and see. I always get that mixed up.
I think it's billion too.
Yeah, sure. I think it is a billion.
I was going to say not only the poor class was hurt by this, but also the wealthy class. Millions.
Yeah, exactly.
Also have frozen assets.
Yeah. So I mean, if y'all know me, if y'all have had a conversation with me, if y'all in the Discord, if y'all popped on any of our live stream calls, weekly live stream calls, y'all know that I'm a huge proponent of self-custody. And this is why, you know what I'm saying? Like, I don't leave any of my assets on an exchange for this very reason. I still use exchanges for the for simply just the purchase of a particular asset. Once I purchase that asset, I move it to a hardware wallet or a wallet that I own the keys to, that I have control of. I never leave my assets on the exchange for this particular reason. I haven't done it in all the years that I've invested in crypto. I've never left my assets on an exchange, and I'm not going to start now. And this is why. So I definitely endorse self-custody, no matter how you go about it. As long as it's safe and secure and you own it, you're good to go. I mean, there's a famous saying in the industry, not your keys, not your crypto. And this is essentially what they mean.
Okay, I got you. Not your keys, not your crypto. Okay, yeah. So self-custody, making sure that you have access and also governance over your investment or assets.
Mm-hmm.
Okay, cool.
Yeah. So I mean, and just circling back around communication channels. I know I kind of roped that into identifying scams, but make sure they have legitimate communication channels. Make sure the activity is where it needs to be. That shows a healthy project, a healthy ecosystem. Common communication channels that crypto projects use are obviously Twitter, Discord. They also use Telegram. So a lot of people like to get into those private Telegram groups because those are more intimate. Sometimes a lot less people join the Telegram groups. More people tend to join the Discord groups from what I've seen. But yeah, as long as there's healthy communication amongst those, whatever those channels that project uses, as long as you're able to get timely updates and, you actually see motion in that project, they're delivering stuff, I think you're in a good position. But if they're not, 9 times out of 10 it's a scam.
Wow, just like that. Just like
Yeah.
that. Okay, so transitioning to the next part of this conversation, because we want to make sure that we give them an eagle-eye perspective. Right? What are strong nodes? I want people to kind of understand ring nodes. You know what I'm saying? What are nodes, and then what benefits or pros and cons do these nodes have on us as consumers or even investors?
Yeah, so to put it simple, a node is essentially a computer that helps validate transactions as they happen on a particular network. Almost all blockchains have some type of node structure. Some blockchains are more permissioned, meaning you have to be asked to join the network and run a node and things of that nature. And some are permissionless, where you don't have to ask permission or gain permission from anyone to run a node and start helping validate transactions as they happen on the network. So strong nodes in particular, and ring nodes in particular, and even Phoenix Community Capital, all three of these are scams that I've seen happen in recent memory. Strong nodes, ring nodes, and Phoenix Community Capital were big projects. I want to say like almost this time last year. Actually,
Were they private or public?
No, it's all public. So
Okay.
with these, I'll start with strong nodes and ring nodes. These two particular projects, what they do is they allow for people to buy a token, and they were both operating on the Ethereum network. Funny enough, these projects would allow you to buy their token, and you would have to use that token and basically stake it, quote unquote, stake it, in order to create what's called a node on the network. And what creating that node on the network would do is it would allow you to create passive income. The more nodes you had, the more of this token you generated. The more of the token you generated, the more you can cash out. I mean, I literally remember people all over Twitter talking about they're retiring off of their rewards on strong and ring nodes. I mean, people were getting hundreds of these things. They had multiple wallets going with these strong nodes and ring nodes, and then it all came crashing down. I mean, it took a while. It wasn't like an immediate effect or anything like that. It was like a slow bleed effect. And one of the key characteristics of these two projects was the unsustainable returns. Yeah, so these projects had a very key characteristic amongst strong nodes and ring nodes, and it was the unsustainable token price, the unsustainable returns. So, I mean, you're not with both the strong nodes and the ring nodes, you were earning the very token you had to use to stake and create these nodes in order to create additional passive income. So as it's pumping out this token, you're essentially inflating the circulating supply in a way, because you're not technically locking it up. And in order to
like fake rewards,
in a way it is, because I mean, when you would say you wanted to go and cash out, right? You sell the token that's needed to make the node, right? So at a certain point, people are no longer incentivized to take the token and turn them into nodes. It's more beneficial to cash those tokens out, to realize the passive income. And then, like I said, it was popping for a very long time, bro. Like, I mean, I remember sitting on Twitter, this, like I said, this time last year and the summer before that, thinking like, damn, man, I missed one, this, that, and the other, whatever, this, that, and the other. I'm seeing people talk about, I'm retiring today and I made this much money and that much money, and it kind of sucks seeing people flex on you, I guess you could say.
That's real.
On Twitter, but I'm glad I didn't get into it because I dodged the bullet. I want to say last year is when things really hit the fan for these node projects. They were unsustainable. The business models of them were very unsustainable. People lost a lot of money. Like I said, those communication channels and timely updates and what's new, and there just wasn't much to do with these tokens, but turn them into nodes or cash them out to realize the passive income, and that's not a sustainable ecosystem.
So Phoenix Community Capital were using Stronger Ring nodes?
No. Strong Ring nodes are two different projects. Phoenix Community Capital is its own project.
Okay, so Strong nodes and Ring nodes are individual scams that where the consumer investor think they're getting a real reward when they're getting a shadow ghost reward.
Yeah, I mean, it was just unsustainable. People were getting real rewards. I mean, people were making money off of it, but just like any scam, I mean, it only lasts for so long before the reality starts to sit in, you know what I'm saying? And people really start asking the questions when things ain't so sweet no more. And it's gradual. It's not just instantly sour. People started getting that sour taste eventually, and then that's when things really started hitting the fan. And that goes for both strong nodes and ring nodes. Same thing for Phoenix Community Capital. Phoenix Community Capital is similar but different in a way. So Phoenix Community Capital, they advertise themselves as a decentralized venture capital project using blockchain. So they would essentially help other projects start and get off the ground. They would fund other projects to get off the ground using investors' money. And that's the whole purpose. That was the purpose, right? Like people.
So that was okay. So they was telling their investors this is what we're gonna do with their money.
Yeah, I mean, this is what it's used. This is what it's being used to invest in. Okay. I mean, they helped start a decentralized exchange on the Avalanche network called Swapsicle. There was several other stuff. There was gambling projects started with the funds that were invested, and similar to ring nodes and strong nodes, the investor would buy a token. It was the fire token. You would essentially you would have to stake 10 fire tokens to create what they called a nest, and that nest would pay you out a specific amount of fire token every day. Obviously, the more nests you had, the more fire per day you would earn. I mean, people were making like $800, $900 a day off of Phoenix Community Capital or more. I mean, there were people that had 100 nests in one wallet because that was the max. They would turn around, build up another wallet, have 100 nests in that one, and people were making bank. I mean, in the beginning, like if they were a really big whale, I know a few people that were making like 100,000 a week type thing. Like, I mean, it was pumping out money, bro. I mean, like the price for the token at one point was $1,000 per fire token. So it was up there.
Cool. So with that, if you were now knowing what you know now about Strong Ring nodes and the Phoenix Community Capital scam, what are some questions you would have asked going that could have hinted?
Oh, well, I mean, I was asking questions that made it very obvious that it was a scam. Okay. It just goes back to, again, those red flags we talked about in the intro, communication channels, how they feel about how do they react to constructive criticism? When you start asking the real questions, are you getting real answers, or are you just getting brushed off in a way? You know what I'm saying? Your question not really being answered. And yeah, I mean, those are the things that you have to do, no matter what the project is, no matter who's claiming to back it. You know what I'm saying? You have to ask those questions, especially as an investor, because it's your hard-earned money that would get lost, not somebody else's. So anybody should ask these questions when they coming in as an investor. So again, those same things we mentioned in the intro are the same characteristics that all three of these quote unquote scams that we've talked about, whether it was strong nodes, ring nodes, or Phoenix Community Capital, they displayed those characteristics. Okay.
And like you said, never feel discouraged to ask questions, because those questions could highlight those red flags. And when you see those red flags, you can look at these communities and separate the solid communities from the weak communities in a sense. The
The fraudulence. Yep. So yeah, just be aware of the red flags. You know what I'm saying? Find those solid communities, and you do that by vetting them. You know, asking those questions, seeing how the community is, catching the vibe of the community, how well or how active is that project or that team on their chosen communication channels. I mean, and that's just the basics. You know what I'm saying? That's just the basics. But if you're able to check, green check mark on all of those, you're 9 times out of 10 you found a solid community. If you can't check off any of those things, you know what I'm saying, and you get red flags, probably not the community you want to be in, and definitely don't want to invest any money from an investor standpoint into that project.
And don't focus on only investing, because what I've done in the past is not only researching the company and what they do, but researching the people of that company, the CEOs, the team leads, the lead developers. You know what I'm saying?
Yeah.
What do they study? What do they know? What is their past business like? In a sense, because like you said, you're finna pay them as an investor to help them succeed. So why not do your research and vet who you're about to invest in?
Yeah, and just a couple of last points. If a project or members of a team are not doxed, meaning their true identities are not known to the public, you probably don't want to invest in that. You should never invest in something where the project team is anonymous. Like you have no idea who that person is on the other side, right? Like you have no idea what they're about, what their expertise is. Just the regular. Like for instance, if people didn't know who the hell Bill Gates was, would they invest in Microsoft? Probably not. If you didn't know who Tim Cook was or Steve Jobs, you would not invest in Apple, right? So why would you do that with crypto? You know what I'm saying? You got to know who you putting your money with. And finally, you definitely want to be sure you know who you're investing with, because believe it or not, people who have scammed in the past are also some of the people that are scamming now in the digital asset space, right? Wow. Those are typically the people who try and go a very long time without being doxxed, without revealing their identity, and things of that nature. I'm just at the point where, man, I'm not putting no type of money with nobody who I don't know. And I had to learn that hard lesson early on in my investing career when it came to digital assets, because not all money is good money. 1. 2, you work hard for your money, right? You go to work every day, just like everybody else, whether you work at a 9 to 5 or you're an entrepreneur, you put in that work to generate that income. It would be a shame for you to put in all that work just for you to hand over your hard work to somebody else, just willing, just off the whim.
That's
what I'm saying. So you definitely want to know who you invest in your money with. You got to be careful with that. A lot of scammers have entered the digital asset space. They've scammed in the past in other financial ventures, so they're gonna try and pull a quick one in the digital asset space. Some of them have gotten away with it, others have not. But yeah, if you pay attention to those red flags we talked about in today's video, you should be able to steer clear. You know what I'm saying? But you definitely want to be aware of all of those things that we talked about today.
My stock picks, man, and then we can have you end off with your crypto picks, man. My stock picks for the first Got Assets episode of 2023, I really want to highlight not even a stock, but an industry that I think is going to be I think this industry is going to go on sale in 2023, and I think it's the tech industry. We see a lot of these tech companies. If you know any company that produce software, hardware, and hardware like smartphones, hardware like computer microchips, believe it or not, that's a very big market. Microchips, you know what I'm saying? So just to say technology, and when I say technology, I want to bring up investing. This may be new to some younger investors. It's called an ETF, an exchange traded fund. This is where you actually have, as Ace said in the past, think of it as you have a basket of stocks. right? So you get to go shopping in the stock market, and in ETF, you get to say, if I pick this bundle, it's gonna give me these stocks, or if I pick this package, it's gonna give me these stocks. So an ETF is an exchange traded fund where you can look at industries, commodities, any market, and say, I want to invest across the board in this asset. So you say, instead of me investing in one technology company, I can invest into one ETF that invests into 20 technology companies or 5 technology companies. So I would say definitely do your research on what an ETF is, but that's definitely a long-term investment, a long-term play for financial freedom, financial success in the future. ETFs.
Yeah, that's actually a really good pick. Just general pick of all, especially kicking off 2023. For crypto, we have a major event happening actually at right now as we're
Shout out
recording this.
Flair. Shout out Flair.
Yes, sir. Yes, sir. So if y'all have heard me talk about Flare Network before, y'all have heard me talk about Songbird Network. The Flare Network is officially live today. Of this the time at the time of us recording this video. So that's 1/9/2023. That's January 9th, 2023. The Flare token distribution is underway as we speak. Last I checked, they are about 50% done with distributing the tokens. So they're getting it out pretty fast. So if you were able to participate in that airdrop and claim your share, good luck. Congratulations. It's been a long road. And let's see what the future holds. So yeah, my stock pick today, or my crypto pick today, is the Flare token, ticker symbol FLR.
For sure. And Flare is a token that is also on sale. It's inexpensive right now, but with the right information, with the right resources, with the right people, you can make the right investment. And Flare is one that Anthony highly speaks of because of various solutions that they have to problems. So man, I know if he speaks highly of it, I need to invest into it, and you need to invest into it, and everybody needs to invest into it. So appreciate that, Ace. Lit. So we got the Flare airdrop tonight, 1/9/2023, and people are actually qualifying or being accepted to receive free Flare.
Yeah. So you had to participate in the snapshot claim process December 12th, 2020. Okay. So it was a while ago. It was specifically for XRP holders. So if you held the XRP token of any amount and you went through the snapshot claim process, then you will be receiving the Flare token today.
Yeah. Okay, cool.
Airdrop to you. Yep.
Well, that wraps up another episode. This is at Ace the Greatest on Instagram and at One Savior Smith on Instagram and Twitter. Make sure y'all follow us. But again, remember, until next week, make sure you guys pay attention. We out.